Up this morning. How you guys doing this morning? We got some news coming out. Jerome Powell speaks. He's going to speak a little bit in about what? I think he speaks soon. Should be speaking. There we go. That's the bell. Now the market is going to open. I'm actually taking a look at Tesla yesterday. It had clear support and turn that resistance into support. So I'm hoping it comes down to this level. If not, then maybe not. But overall market is also at a critical level here in my left-hand side. You can see it. We got the S&P. This is S&P basically. So the S&P is at a critical level. That 435 it needs to hold for us to continue. But we do have Powell speaking today. So usually when Powell speaks, the market gets a little funky. The technicals don't necessarily hold up. And we'll keep our mind on that. Also, it looks like we're gonna have. It looks like Biden's proposing to ban certain chips, which is hurting Nvidia and hurting AMD from going to China. And if that's the case, now all those upside moves from all those people piling into AMD calls and Nvidia calls. I mean, now you got some risk on the table, right? Now you got some risk on the table. So if you got in early, that might be, here we got the pullback on Tesla. This is what I was waiting for. I'm looking for this next level, 247 to at least hold. But the overall market is rolling over, right? S&P, SPY looks like it's gonna roll over for now. That next level is 434.50. That was the breakout from yesterday. Maybe we get that hold. Either way, I'm gonna be watching Tesla because I trade Tesla a lot. 247 is what I'm looking for. That hold. We'll see if we can get out of there. Let's get to that 1 minute. Let's go. Oh, what up? I think we got some comments. Soggy, what up, Soggy? How you doing this morning, man? Yo, yo, yo. Man, the chip makers are getting hit. Let me take a look in this window. Actually, no, I have a window down here. I can see AMD. Taking a look at AMD. AMD is actually going up right now, so it's doing the opposite. We have Open Door is now breaking out. So now we have Open Door actually breaking out. Dang, Tesla got a nice bid there. Qs here at the top are still, the Qs are moving up initially. See, is Tesla going to break this downtrend? What's going on, Soggy? Here's what we got so far for the stream deck. We have support. Technical support is trying to fix this computer Mac problem. Dang, Open Door is moving, but what up, Soggy? That's what we'll have to do with for now. Here we go. Tesla's starting to push. I'm watching Open Door in this other window also. It has been breaking out lately. I'll look to see if it actually has a nice setup. If we get a wedge, I want to see an actual pattern form. Excuse me. I want to see a pattern form for Open Door. And we'll get to the news. We'll get to the macro news. A lot of macro stuff starting to shift the market a little bit. AMD looks like it's starting to form something. Come on, Open Door, give us an opening. Tesla might blow through this resistance. We've seen this pattern so many times. It comes down, it just can't push lower, right? And it starts blowing off top. So what I'm going to do is I'm going to look to start scaling in. I got in yesterday, scaled right back out. 247, if we roll over, 247 is going to be strong. So let's see, we're pulling in a VWAP here. And we do have Powell speaking, so we'll keep that in mind. We got to keep that in mind. Watching IWM, as usual, IWM. Also, Sagi, were you asking about the buying a house, right? Wasn't that you? We're going to have a podcast tonight, actually, 9 p.m. Eastern time. Should be 9 p.m. Eastern time. How to buy a house, real estate. We got a real estate expert coming on the pod here on YouTube. It'll be at 9 p.m. Eastern time. So jump on there if you can. Get your questions answered. We're supporting PDC at the moment. Qs are moving up. Qs are moving up. SPY here in the left-hand corner. You see the SPY is kind of struggling, but it is starting to turn up a little bit. Advanced decline is negative this morning. The VIX is, IWM is selling off pretty hard too. VIX doesn't have a direction. We might be supporting VWAP here for Tesla. We'll see. It's still a little volatile, but I do want to scale in. Ooh, yeah, a lot of bids there. Yeah, semiconductor, SMH, the semiconductor unit is falling after that news from Biden, looking to actually ban some chips from China. Okay, there's Open Door. Open Door is showing a nice little setup. Let's see if we can. Ooh, it already broke. That was quick. Let me see. What is this? 350. Pull back into 350 maybe. 347. This thing is moving. Oh my goodness. There we go. I'll keep my eye on it, but I still want to scale into Tesla. Open Door is filling a gap or starting to break out of a large resistance area. So I'm keeping my eye on that. AMD with a nice bounce off of PDC. Oh, no, is this PDC or VWAP? AMD with a nice bounce. All right, Tesla's pulling up. I still want Tesla more than anything. It's the easiest trade for me. I know it's going to stick. A lot of stuff down the pipeline. So I want to scale on there. We got 2 1-minute holds on that PDC. We're starting to break above. We might be breaking above this level. That time is perfect. Yeah, okay, perfect. Yeah, Sagi, we're going to have that, man, tonight, 9 p.m. Check it out. I want to see you on there, bro. We'll talk real estate. This is one of my good friends, so it'll be a nice little setup. All right, here we go. I'm in 50 shares. We had 3 bounces off of VWAP, and the Qs are climbing. The Qs are climbing. I definitely want to scale into this. Open Door still flagging there. Stop, hold below. Actually, my stop has to be below 250. Stop below 250 right now for Tesla. I don't even know if you guys can hear that. Anyways, that's my stop. Seen this pattern a lot of times. There's a lot of interest here still. So I'm getting long Tesla. I'm long Tesla. Making new highs now. Q still starting to climb. Okay, here's the pullback. Here's the pullback. AMD. I'm gonna wait for AMD. I am not looking to rush into AMD because see if we could support that previous day high. Actually, what is our pre-market highs? Okay, we still need to bust through a couple levels. Pre-market highs are up here, 250, 250. Let me take this off. That's messing it up. All right, we got pre-market highs right here. I'm going to say 252. That's sort of where we're holding. And we're holding 251. Okay. Oh, big pop on Open Door also. Q still moving up. We are in the 1 minute. I could turn on the tape. We could watch the tape here on the side. Logo's kind of in the way, but you're looking at these big orders start to come through. I want to see a pullback in a 252 and a hold really quick, and then I'll add some more size. It is pushing. It is pushing so far, and so is Open Door, but I don't want to chase Open Door because it's not my A+ setup. I want to chase. I wouldn't get super sized into Open Door anyways. It'd just be a nice swing trade. But I will get sized up into Tesla. I still think we get a pullback or something. Somewhere I can add a little more size. How's the chat doing this morning? What are you guys looking at this morning? I just want to get this opening drive play on Tesla before we hit the macro. Before I know Powell's going to be speaking. He might be speaking right now. I might be missing it, but hey, I'm here to trade also. Okay, there's the pullback. Let's go. Man, if this thing doesn't give me a pullback, I'm going to be kind of sad. I'm already sized in a little bit, so I'm okay. Q's starting to pull back here in the corner, right? Most important thing is I'm watching the Q's and I'm watching the SPY, right? I'm watching the Q's. S&P is still struggling, so you know it's not ready yet. I think we do have a pullback. We are pulling into PDC. I'm going to be patient here. How's our audio doing? Pretty good. And Tesla doesn't want to pull back. After supporting that 247 level, this thing just doesn't come back. Yeah, it is lifting. It is lifting. We're well above those pre-market highs. All right, 250, 250. This could be another level that we pull into. Usually you see it. Usually you'll get the pullback. I think we're going to see it. Usually we do. Watch 250, 250, or 250. One of those levels we'll pull back into. But it is strong. Sharp move away from price. We've seen this price action so many times. We've seen this a lot of times. Wow, no pullback so far. Okay, that's fine. No pullback. Not yet, anyway. I'll take this off. We don't need to see that right now. See, open door is still climbing. Makes you want to just get a long call option on open door. Dang, yeah, this thing is vertical, so we're not playing here. We're in 50. I'm holding like 50 shares. I was looking for a pullback, but we're not getting it. Here it is. Come on. Let's go. Let's get that pullback. The S&P is starting to break the downtrend now. Starting to pull up a little bit. You see it in the left-hand corner. The Qs are approaching PDC, so that should give us a nice pullback on here. Let's see if we support the 9 EMA. All right, Q's at resistance. Q's at resistance. I'm going to double check over here to see what the... Okay, is he speaking yet? Is Powell speaking? Not yet. Oh, yeah, he is speaking right now. Tell me if you guys can hear this.
And we did that. If you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago. And we think, so we've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long. We started at negative real interest rates, and we've now moved up to where we actually are in restrictive territory, but we haven't been there very long. So we believe there's more restriction coming. And what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created, there's strong wage gains, and that's driving spending, driving real incomes and driving spending, which is driving more demand and continuing to drive labor market. So the labor market is really pulling the economy. And my colleagues and I, as you will know, wrote down in our SEP 2 more additional rate hikes. The median was quite a strong majority, actually wanted 2 or more rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive.
All right, well, he's speaking, but I'm going to finish this trade off. At least holding, go through. We can always go back and listen. So, okay, we're rolling over. Q's rolling over pretty strong. Nice. I mean, not rolling over completely, but nice little pullback. Tesla seems a little stronger than usual. So whatever Powell said, it's going to be a little volatile. Let me double check. What is this? Let me double check over here. Get that news. All right, we're getting that VWAP support on the Qs. Nope, rolling over. So here's the pullback on Tesla. Perfect. Perfect. Nice consolidation so far. We're getting a little bit of consolidation. Obviously, the lows are here. VIX starting to spike a little bit from whatever Powell said.
So I don't get why you didn't raise rates at the last meeting, especially I think it was a surprise that it was a unanimous decision to hold rates steady. When you said a majority think that they still need to go farther on raising rates.
It's really just as you get closer and closer to the goal, what we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them a little bit with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming from these, through the pipeline from rate hikes that we only made now in many cases 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike.
We've not decided that. So the only thing we decided was not to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way. It may not work out that way, but I wouldn't take, moving a consecutive meetings off the table at all.
I'm trying. Governor Ueda, first of all, it's great to talk to you. We haven't heard much from you outside of your policy meetings in Japan. I think the world wants to know why you're the global outlier here. You have decided to maintain your easier monetary policy in the face of rising inflation. Why?
So a simple answer would be, although the headlining rate of inflation is about 3%, which is well above the 2% inflation target, we think underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
Even though we've seen measures, including core, right, higher than the 2% level.
Core is also above 2%. But let's say, let's look at the rate of increasing wages, which is an important determinant of underlying inflation. It has risen, but is now running at around 2%. Now, if you want a 2% inflation rate, wage inflation that's consistent with that would be slightly or well above 2%. If you assume productivity growth rate is positive. So there's still some distance to go, we think.
And as a result of your policy being different than all these policies of your colleagues, the yen has gotten very weak and continues to weaken by the minute. Is it too weak?
Well, the yen is being influenced by many factors other than our monetary policy, including the policies of these 3 banks. So we'll see. We monitor the situation very carefully.
Monitoring the situation for intervention purposes.
No, it's the jurisdiction of the Ministry of Finance. Decisions on intervention.
President Lagarde, how much would you like to see inflation moderate from these levels? Because we've already seen a nice moderation. For you to feel comfortable taking a pause or potentially going the other way.
Well, this is not what we're considering at the moment, okay? But if I look back at what we've covered, inflation was, I think the highest reading we had was 10.3. We are now at 6.1 headline. Core has moved a bit down, but we are really looking at both headlines, which is the measurement that we have agreed in our strategy and that is visible for people, the consumers of Europe, but we're also looking at underlying inflation. And on that front, we are not seeing enough tangible evidence of the fact that underlying inflation, particularly the domestic prices, are stabilizing and moving down. So we're looking at as many measurements as we can.
A lot of discussion of how it altered the labor market, for one thing. Without a doubt.
All right, I don't know. I don't know how long they're talking. Maybe they'll keep speaking. Either way, I just wanted to pull up that side panel. Still scaling in here to Tesla. Pulling into that previous high. S&P rolling over a little bit. Tesla seems just stronger than the overall market for sure. Why did this? Try to fix this. And then this should be full screen. I don't know why I'm not full screened in here. See if I can get this full screen. There we go. Come on, bro. All right. So anyways, we're seeing S&P actually find support at the previous day high. I mean, the previous day resistance. So it was 434.50 where it first broke out of right here, this green line. And even though we dropped 435, we are finding support there. So Tesla's stronger than the overall market as usual. This should have been a little scale in here, but I missed it. Should have been at those highs. Missed it trying to do all this stuff at once. Man, open door is just vertical though. Wow. I'm going to kick myself in the face for missing that one. AMD is still pretty weak. I think AMD and NVIDIA are still pretty weak. Russian foreign minister, Moscow contact with the U.S. ambassador, Fed Powell says wouldn't take moving a consecutive meeting off the table. I don't believe them. I think they're done hiking. As long as we keep seeing inflation make progress. And I think they've never hiked. They've never hiked after a pause. They've never done this. This would be unprecedented. And it's not like inflation is still, climbing at the moment. Over IWM yesterday. What was it looking like yesterday? Oh, that big move it had yesterday, right? Well, it is finding a little bit of support at that 182.50, right? So you got that 182.50 in the pipeline. Any news on Tesla? I don't think so. Oh, that's what it is, the NAX product line. All right, here we go. Let's get this pullback support, man. See if I get the support here while we keep CNBC. Yeah, I don't know why my screen isn't fitted completely. You wanted to buy the 180 level. It just didn't go through. What were you buying it on? What platform? See if we get this pullback. See if we can get this triple bottom for the SPY at 434.50. We might get that triple bottom here. Hopefully. It's looking pretty solid at the moment. All right, what are these guys talking about? Nothing. All right, there we got the pullback now. Q's rolling over. Should see a nice hold. Let's see if we can get that hold here. looking for the hold at 254.70 ish. It's really 254.50, but I don't even know if it's going to come down that far. It's been pretty strong so far on the see, S&P is holding higher. Nice. Advanced decline is starting to pick up. Looks like that trend is starting to break a little bit. I think we just filled the gap also. We might have just filled the gap. Let me double check. Yeah, we might have just filled the gap. All right, we're getting some strength now. A little more strength. Starting to hold the 9. Okay, yeah, S&P is starting to pick up now. Was that all? I think, was that all of Powell's speech? Breaking news. All right, let's see what this is.
Comes another hour of Squawk on the Street. I'm Carl Kingston here with David Faber, Leslie Picker here at Post 9 of the New York Stock Exchange. Markets holding some losses here as all eyes are pinned right now to this central bank forum in Portugal, moderated by our Sarah Eisen, where the tone has been arguably net hawkish. Fed Chair Powell, for example, saying policy has not been restrictive enough for long enough. Take a listen.
The labor market is not as tight as it was a year ago.
Yeah, Robinhood does that, bro.
You're seeing a job creation is beginning to come down. There are a number of indicia that would suggest that we're getting the softening that we need. We're getting it slower than we expected, but nonetheless, it's happening. So it's still a possibility there. But you know, it's so uncertain right now, and that, in my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn.
There's a dovish talk.
But it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible. And of course, many forecasters do predict that.
Is Europe in recession, President Lagarde? I mean, we've seen 2 negative quarters of GDP. I don't know how you define it. But
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant, to say the least. And the expectations for Q2, particularly in the industrial sector, if I look at PMI numbers, are not particularly are not giving us great hope that there will be a strong recovery. We see a second half of 23 up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
do you agree with Chair Powell? Do you think you can get away with this tightening cycle without dragging Europe into recession?
Our baseline does not include a recession, but it's part of the risk out there.
Are you willing to tolerate a recession?
For us is that if you go back to last November, when we did a forecast, we were predicting quite a long but quite shallow recession. And the economy, as I said earlier, has turned out to be much more resilient so far. Now, I think you can sort of point to a number of things that underlie that. One of the things I would point to is the fact that we've had a very sharp fall in energy prices in Europe. And that obviously has helped with the whole question of the terms of trade shock that we've been having. It's done.
Well, advanced decline is starting to pick up. S&P is picking up. pretty sharply. It is the Qs that are finding some resistance here, but S&P is looking strong. S&P above 435 again. Apologize for that sound. Let's see. All right, let's see if the SPY can get above the highs. Not yet. Looks like we're sort of wedging now. We're getting a slight little wedge on Tesla. Small wedge starting to form. We got advanced decline moving up. IWM made a sharp move to the upside. Nice. Let's see. Can S&P get above the open though? Still struggling there. And now the Qs are also at resistance, so not sure yet. All right, still waiting on it. Let's hear what these guys are saying.
Information, which is very, very valuable.
Do you think that, Governor Ueda, do you think that they are over tightening?
No.
No, you don't. You approve of the policy. You've had a very tight labor market for a long time in Japan, even before COVID.
Yes.
Demographic.
Demographics is working in a way to tighten the labor market for quite a long while. And it's going to continue this way for a while.
I mean, the economic conversation, it gets into an interesting question, Chair Powell, where now we're wondering, you know, easier to fight inflation last year when the economy was doing better. But now that we're seeing signs of softness and weakness in manufacturing, and you mentioned the labor market starting to cool off, about overdoing it and the risk of overdoing it. Do you wonder about that, or you're still just focused on inflation?
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting, still is consistent with with an economy that's resilient and growing, albeit at a modest pace. As I mentioned earlier, though, yes, there was no question. The first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take federal funds rate and you subtract some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe they're in. The committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
So you think the risk is still of doing too little and not getting control of inflation?
Yes, and of course
But inflation expectations are, I don't have to tell you, very well anchored.
No, but the thing with the risks is that there may be social costs associated with restoring price stability. The social costs of failing to restore price stability will be higher in almost all likely cases. we've seen what that looks like, and it's just something that we have to do. It's the one of the principal things that society counts on us to accomplish, and I think we all feel committed to accomplishing it. It is of course a good thing that inflation expectations have remained anchored all this time, but our understanding of inflation expectations is not a precise one, and the longer inflation remains high, the more risk there is that inflation will become entrenched in the economy. So we have to, the passage of time is not our friend here.
What about a higher inflation target? I know none of you want to talk about that, but on Wall Street, there's this
higher
idea
inflation
that
target.
A lot of things are changing in our economy structurally. The onshoring of supply chains and chip plants and all of that is going to be expensive and could permanently create higher inflation rates. Couldn't it, President Lagarde?
Well, at this point in time, and given the fight that we lead against inflation, the yardsticks that there is, the strategy that we've agreed, the expectations that we have, and the inflation targeting, as it has been said, there is no way that any of us, I think, would consider changing the gatepost halfway or more than halfway through that journey. I think it's wonderful to have a forum like Sintra, which brings together academics and other than policymakers to actually consider those ideas. And
All right, so same thing. I still haven't figured out how to get rid of this notification sound. I thought I stopped it, so sorry about that. But either way, okay, so open door still moving up. I'm gonna jump right back in if we get above. I'm watching AMD also start to wedge. Tesla really needs to get above 254.50 and hold. That's where it's finding resistance. The Qs and the SPYs kind of moving sideways because it is, Jerome Powell is speaking. And in any significant, it's the same statements as usual. Pretty hawkish, pretty dovish. The economy is going to be okay, but we still need to raise rates. Same story. Same story there. What do you think about Twilio's financial statement? Chavez game one. I'd have to take a look at Twilio's financial statement. From what I know, yes, the goal is for Twilio to, not the goal, but I know Twilio's working, who is it, with Amazon to bring APIs, AI APIs or whatever to something. I got to relook at it again, but they have lost, if I remember right, they've lost a significant amount of revenue. I'll have to go check out their financial statement again. But yeah, Twilio, I think for the long haul, like just looking at Twilio's statement, it's pretty not statement, looking at what they're trying to do, it's pretty solid. Twilio's a pretty solid company. They do have a lot of market share. They hold a lot of market share. They're doing the AI thing with Amazon and probably a lot of other places. They work globally. But I'll take a look at their financial statement. I'm going to have to look at it a little deeper. I do know they're not profitable yet. So maybe this year is the year. Maybe they're getting close to that. What is your prediction on Powell today? Powell's really going to just say the same thing over and over and over and over and over. So it's not, I don't think Powell's going to do anything different than what he's already done, which is pretty much try to keep things in balance, right? Not signal that they're going to stop rates. What he's basically trying to do is keep people expecting that they could still hike, or that they will still hike and they can still hike while maintaining the pause. In reality, we look at the bond market. So if we go take a look at the bond market, what is the bond market saying? Let me pull this out a little bit. We'll look at yields here on the side. So how are yields responding is kind of the question. Yields are responding. We'll probably go to the 2-year. The 2-year is probably the best measurement right now for the Fed. And the 2-year is kind of flat. Not much change on the 2-year as he's speaking, which is basically a testament to that It's the same thing, right? Nothing's changed. We're not making any significant moves here on bonds. Let me dive in a little deeper here on the day. So initially we moved up. We've sold off on the. If the Fed keeps hiking, then these yields should go higher. So the yields are sort of, kind of responding bullish. Like, okay, so maybe they do hike. Maybe they keep raising rates. Maybe they keep raising those rates, and they might do it. They might be able to do that. But it's good to have who is it? The Japanese foreign minister and the ECB, who's it? Lagarde, whatever, on there. It's good optics to keep markets calm. That inflation is making progress. There's a lot of progress in the Euro-Asia area. Not a whole lot in Europe, but the US for sure is going to collapse. I have a pretty solid thesis on that we're going to go over when it comes to Europe. Twilio's financial statement, though. See if I could pull that up on FinViz really quick. I can give you a quick little summary. So FinViz, right? I mean, not FinViz. I'm sorry. Twilio. The technical setup is pretty nice. It is starting to wedge. So above 70, it should have a little room to start running above 70. And then Snow AI MU calls this morning. Dang, people are buying calls on these AI names. The dollar's sort of rising, so this is a risk. When you see the dollar starting to lift a little bit, let's go to that daily chart. When you see the dollar start to lift, and it's not really lifting in a significant way, that's a risk off. So that's a more hawkish tone. This is a reflection of a little more hawkish tone from the Fed. Do we actually believe it? I don't know. I don't think so. I don't think we actually believe it. I'm not sure the market will actually buy into this because, a lot of downgrade. So here's the thing with Twilio. They got hit very hard. Bank of America, there's about 6 banks, Wells Fargo, Jefferies, Goldman, they all downgraded them. Twilio over the last 6 months. So they've been getting downgraded pretty heavily. And so that's why I'm a little cautious on, what they're actually going to do. I'm a little cautious on Twilio because of those downgrades. I got to look deeper into them. I just haven't because it's not on the top of my list. It's not a top priority for me. Yo, get away from that. But leverage. I mean, their debt leverage, their balance sheet's pretty tough. They got a solid balance sheet. Okay, so this one doesn't show me all the info I want to see. I'm gonna have to switch over to check out this one. Where is it? There we go. So yeah, so their EPS, right? Their sales, their revenue is still climbing, but for some reason on Twilio, and I just haven't dove into it yet, their EPS is getting crushed, right? They've been negative for a while and it's getting worse. And they're getting downgraded for that. So that's the thing that kind of keeps me. I'd be a little more bullish on ZM than I would Twilio. So that's the question. What is it that's going on? Although they are partnering with a couple other businesses, what is it about their revenue? Now, if there's some positive, you're going to have to wait for the earnings report to really hear what's going on. That's what I would say when it comes to Twilio. All right, I'm going to scale back and look at switch to that 5-minute chart. The 2-minute chart might even be better. Now we're getting a lot of noise here coming into it because we have the Fed speaking. I still say we have this bull flag in play though. Still got that bull flag in play. Just need to get above 255 now. Yeah, the S&P keeps testing 434.50, still testing that level. So yeah, Twilio, it's a little It's a little suspect, man. I got to look deeper into Twilio. It's a little suspect. But just taking a look at it, you know, gross margins at 50%, income, price to book, forward P 34. They need something good on the earnings. They need a catalyst. This might be the catalyst to get them out of here. All right, now Tesla's starting to move. Man, Tesla still has that insane RVOLs, along with NVIDIA, who is at CVNA. Of course, they're getting squeezed coins, Snow, Dell. A lot of plays today. Now we're starting to step up. Now we're starting to step up and break that trend. Qs are also starting to lift. There we go. New highs on Tesla. Nice. And, you know, Tesla is also breaking out of a multi-day flag pattern, kind of like this one. The only issue is the S&P just can't get above that level. All right, let me go back to... Let's go back to see what Powell is saying.
Brexit is not a function of the inflation problem they have right now, which I think raised somewhat.
And analysts to give up as a result of that 500 basis point increase in rates over the last year.
More expensive, for sure.
Helping us react to some of this morning is former Dallas Fed President Richard.
All right, yeah, nothing there, man. There's nothing there. I'm going to switch this back. Switch this back to the original window. All right, cool. And then can pick this up. We'll talk about some stories if we need to. Come on. There we go. All right, so let's see if the S&P can get above this level finally. It's been struggling significantly. All right, there you go. Open doors at $4 now. Where's NVIDIA at? NVIDIA trying to hold VWAP after getting slammed pretty hard. Looks like buyers are just still stepping in. All right, so that was a big move by the S&P right there. S&P is now making new high of day. New high of day on S&P, which should rise Tesla a little more. I know there's a gap fill around here somewhere. Let me take a step back. Where's that gap fill at for Tesla? It did fill the gap already, 250, 665. So we're at that gap fill where it filled and got rejected yesterday. That is the level. A lot of climbing down here. All right, cool. So yeah, S&P is now making high of day. We're still below previous day close. So there's still some resistance up there. The Qs also getting above. The Qs are strong. Qs making high of day also. Dang, this thing might just keep pushing. We might just keep pushing today. I'm still looking to get sized in a little more. Although I did miss it. I mean, I'm in there, but it was a little tricky. Maybe we'll get this pullback into this previous high. That'll be perfect because it's also around that 1 EMA. Maybe, maybe not. We'll see. Because the Qs are moving up. Qs are moving up. Advanced declines moving up. I think because the meeting's over, IWM starting to make new highs. Now that the meeting's over, I mean, it's probably still going, but it's nothing unexpected, right? As long as there's nothing unexpected, I think the market wants to just hear that there or wants to anticipate, okay, is there something bad gonna happen? Let's sell off. If nothing happens, then the market is a little more relieved. There are no uncertainties, because that's kind of what's rocking us to the downside is uncertainty and surprises. No surprises so far. A lot of resilient talk by these central bankers. And these are the central bankers, by the way. These are like their comments are important because they are the central banks, right? They are the central banks. Their policy is going to determine where liquidity heads and when asset prices start rising again for investors and for the economy. All right, so yeah, S&P is coming into resistance. We still have some, as long as we hold this 435 level, I'm pretty sure we've broken the trend on S&P. The S&P trend is broken to the downside. So we found support. This might be the bottom that I, keep screaming at. Once we bottom here, this is the last pullback that we will see. This is probably the last pullback that we'll see because the macro is starting to come together now. And I'm keeping my eyes out to see if there's anything new coming in the pipeline from Powell. The latest economic data is consistent with the U.S. economy. Yeah, the U.S. economy is quite resilient. We'll go over that. Quite resilient. We're going to go over that. I just want to make sure that that we're flushed or that we complete this trade. I'm trying to swing trade this anyways. Powell policy hasn't been restricted enough for long. We're restrictive. We're in restrictive territory, so that should be fine. All right, let's get this pullback. All right, so on the flip side, I'll talk a little bit about the economy, what we're seeing. Now, this morning, was it this morning that we got, or no, that's tomorrow. Tomorrow we get GDP, so that's going to be big for the market tomorrow. We're going to get those GDP numbers. What is it? Durable goods went up yesterday pretty sharply. So that was a positive. Oil is set. I think inflation is just going to collapse and we're going to get a pretty insane rally. I think FOMO number 2 is coming for the stock market, the Qs, and as long as we don't get no black swan events for the Qs and for the S&P 500, I think we're going to see the second FOMO wave pretty soon because inflation is falling apart, especially in the Euro area. And the US, I think it collapses by the end of the summer. The economy is slowly starting to actually expand, right? A rolling expansion. We're kind of in this rolling recession, rolling expansion, where definitely we see, oh, nice. We're getting support there at that previous high. That's good. We're getting support at the previous high. And then the S&P also. But yeah, we're getting this rolling expansion happen. Financials, we're in a recession. Manufacturing still in a recession. The housing market is actually starting to recover. Real estate is not, because real estate, you got the housing market and you have commercial real estate, right? You have some other, there's different types of real estate, but for the most part, the housing market's recovering while commercial real estate is in a recession. It'll probably be there for a while, to be clear. Commercial real estate's in trouble because we're in the virtual economy now and people just aren't using offices the way they were in the past. So we have that. And also, as commercial real estate falls apart in manufacturing, that also puts a negative pressure on inflation. That keeps inflation pressures pretty tame because you're not getting significant movement in your traveling, right? For traveling. Yes, I know people are traveling at a record pace right now for, summer travel, but for business, it's really just not happening. So it cancels it out, right? When it comes to business, usually people are flying to other areas or they are meeting up in the city, whatever it is. Now everybody's using Zoom or they're using Google Meets or they're using that. That's why there's billions of dollars being pushed into that with the AI tools also at the same time. So I think that just kills or destroys the demand for oil, for energy, and people travel more. That's fine. They can travel because also that travel is going to keep the economy strong. All right, so we're getting the Qs start to support PDC there in the top left corner. And the S&P is now supporting that 435. Hopefully it holds. We'll see. We'll see if it holds here. I know the meeting's not over completely. IWM selling off a bit. The only thing I don't have on here is the Dow. I can see if the Dow's been weak all morning. Didn't even see that. Dow's been weak all morning. But the Qs are pushing up. Qs are starting to push up for sure. Okay, cool. So yeah, oil is weak, man. Oil is weak and it continues to weaken. I think it's going to roll over into the 50s eventually. And this is Tesla. This is not oil, but it's going to roll over eventually. Because mainly you have Russia and China, and I say this all the time, you have Russia and Iran selling very cheap oil, so offloading more supply and selling it very cheap to China and India, which are the second and third biggest consumers of oil. Possibly, I don't know about India, but India is the biggest population now, so I'm sure it is. And that's going to put downward pressure on the price. The ISM global manufacturing in general is still pretty weak. The US is in recession, Europe is in recession, and manufacturing is going to take that manufacturing sector of the economy takes the most oil. So if it's in recession, it's going to take less oil because there's less orders, less delivery, right? You have no deliveries, you have lower lower orders in general, which means less deliveries, which means less travel, which means less energy. So I think that's the other factor. And then to put the nail in the coffin, it's really comes down to the virtual economy. I think it really just comes down to the virtual economy, right? Zoom, Google, like I said, Microsoft Teams, Google Meet, Zoom, Instagram, Twitter. Like people are just socially, they also hang up. They also hang out, my bad. Discord. So like it's just less travel, less energy use in that area, right? So less demand and more supply. I think oil's going lower. And then we should see CPI. Man, I don't know what Powell's saying, but the market is ripping. Maybe he's not talking right now. Let me look at the notes. See what he said. He might have said something else. It's kind of tough to do all this at once, but I'm going to try it. I'm going to fail multiple times, but I'm going to keep at it. Fed Chair Powell says U.S. economy is quite resilient. We just read that. Fed Chair says we don't target particular parts of the market, whatever that means. Nvidia is starting to lift. What is Palantir looking like? One thing I haven't seen. Oh, Palantir is back above 15. Yeah, that was nice. Palantir back above 15. Yeah, that was a nice breakout there for Tesla, though. Nice momentum. going into it. And if you're thinking about Palantir, what do they actually do? I'm just going to throw a couple things out there. Palantir offers anti-money laundering through their AI system, applied customer intelligence, AI machine learning, automotive mobility, auto racing. It's a lot of it's a lot of stuff that people are unfamiliar with, but these are the markets they're tapping into: consumer goods markets, cryptocurrency. I'm actually interested to see how they actually help that out. Data protection, obviously, defense, ecosystem, edge AI. That's going to be a big one. Edge AI is huge. Energy, federal health, financial services, Foundry for builders. That's part of their platform, the Foundry platform. There's a lot, man. There's a lot of stuff that Palantir really does. So yeah, you could trade it, whatever, but like ultimately, once their earnings come out and their guidance continues to increase, they're a lot more profitable than sooner than people thought they would be. I think they just continue to fly. It's about a 30 billion market cap. Total addressable market maybe in the hundreds of billions. Pretty sure it is. Probably more than that. You got ARK Invest starting to buy back. So advanced declines still moving higher. S&P is moving to that previous day close. We got the Qs running into resistance. All right, 257.50. No, that's actually the Qs that have that major resistance at 257.50. But yeah, we are looking solid here. Now, looking back, what are some other reasons? See if is there anything these guys are saying? Oh, so that's the Bank of England's, the UK. Oh, I didn't realize that. Usually I just hear Christine Lagarde. Maybe she's for the EU, but the Bank of England's central banker. I'm not familiar with that guy. I don't really track his macroeconomic. Well, not his, but the Bank of England, the UK. I don't see the UK's data as much as I do other datas. Okay, there we go. Tesla new high of day, still pushing higher. Yeah, so that whole thesis of inflation collapsing, just keep this. I just want you guys to keep this in mind. If it helps your narrative. We know oil is set to go lower despite what you hear because of all those factors, right? More supply, less demand, essentially. And that'll just even out. Traders are going to sell it eventually. And the big part is like Saudi Arabia, bro, they can't lose market share to Russia and Iran. I think, they cannot lose market share to Russia and Iran because they're not just going to keep cutting production while Russia and Iran increase production and sell it at a cheaper price. That pushes them out of the market. Sort of like how Tesla is doing to the automotive market by lowering prices. Everybody's like, oh, they're crushing their margins. But the goal is they're lowering margins, but they're gaining market share because now you have customers coming to Tesla, right? Because the cars are much cheaper. They're already a better product. So same thing with the oil market. As people head to say, not people, but as these nations are like, well, Russia and Iran are selling cheaper oil. Why would we go with Saudi Arabia, right? So Saudi has to do what? They have to cut their production. I'm sorry, they have to increase production. They have to get their prices lower. What up, Spike Dodgeball? How you doing this morning? So I think there's a race to the bottom. There's actually going to be a race, and oil is going to actually collapse. That's going to destroy inflation expectations, and the market might be sniffing that out. Maybe, possibly, maybe not. And that next thing that's really crushing inflation expectations is or that's keeping because inflation is the main dragon. I say this all the time until it's done, until everybody realizes it, because they don't yet. Is that shelter CPI is what's keeping core hot or keeping core sticky. And that is not going to last. That is not, the real-time data points to much lower shelter prices for the US anyway. New supply is increasing for multifamily homes and properties. Old supply is increasing because people are not renewing. They're leaving to go live with their family members. So you're just getting this supply onto the market for housing, right? Also commercial real estate. I mean, that's the other part of it. That's the other piece of it. And then so you got rental prices falling. Landlords are obviously have to lower their rents so they can, stimulate a little bit more demand. And man, what a move for Tesla. What a nice move. Maybe we can gap up today or close high at the high of day. What are we up? 3%? Probably need a news catalyst to go higher. Can't hope for the best, but I think people are going to, okay. So Tesla trading higher on possible anticipation of the company's Q2 delivery numbers. So we got those delivery numbers coming out. Is that today? Guess we'll find out. Maybe it's a buy the rumor, sell the fact. Either way, it's breaking out on the daily chart again. So yeah, those houses are coming online, and we also see that in the data, the housing data, like new home builds. Home builder sentiment is up. They're building more. Building permits are up. Housing starts, which are new construction builds, are up. So housing prices are falling. At the same time, the supply, well, we know the supply is going up. And that's just a positive outlook for if you own a home, maybe not, obviously, but you're not going to, you're not going to sell your house. Rates are way too high. So that should bring down housing prices. And once that shelter really collapses, then core CPI goes to 2%. The Fed has met their target. And the way it plays out is they cut rates. They cut rates as the economy is slowing to stimulate more in the economy, to get more to revamp the economic picture, to get GDP back up. Because if GDP is low for too long, you can't pay the interest payments. You have to borrow, which I think they're going to borrow anyway. So yeah, inflation is set to get destroyed, set to get crushed, in my view. And a lot of people don't believe that. And a lot of people waited for a recession this year and for the market to go lower. It just didn't happen. And eventually, I think we see debt. We see the Fed, either cut rates or we see more fiscal policy. What did we get yesterday? The $41 billion internet Wi-Fi bill from Biden. So more fiscal liquidity. As I've been saying, we're going to keep getting more liquidity because it's an election season and he has to impress the voters. Not just that, we do need it. We do need it so we don't fall behind. But the question is, how's it going to get monetized if our GDP is negative? How are we going to monetize that? Well, this is how we monetize it. The Fed buys it. The Fed buys the debt over time. Wow, what a push. What a push. We're pretty vertical. If you bought options, you probably would have done pretty well. Look at all-time highs are just right here. That's insane. We might be headed there, though. We might just keep moving higher for Tesla. Spike Dodgeball, what are you looking at? What are you checking out, Spike Dodgeball? So yeah, that's what's going on the growth front. Growth is just better than feared, better than expected. Man, this thing is moving up quick. All right, we got the Qs. Let me look at the Q. Where are the Qs at? What's going on with the Qs? What is this? Oh, I went on the wrong chart. Yeah, the Qs are just vertical, man. The Qs are vertical right now. This might have been the bottom, guys. This might be the bottom. That might have been the bottoming out pattern. 357.50 for the Qs. And when I say the bottom, I'm talking about this year. That might be the bottom. That might have been the last pullback right there. WTI rallies after big crude draw. Biden drains SPR for 13th week. And he keeps draining the SPR. So what crude is starting to rally. Let's see oil futures really quick. Oil futures at 68. Yeah, coming from the highs. Oh wow, look at that. That's a clear sell pattern right there. They cut production, couldn't get above 83.50 after they cut production. They signal another cut somewhere around here. They signal another cut and oil just rolls over. Can't get past 75 now. So we're stair stepping lower on oil. And what is it? 60. Looks like 66. Looks like under 66, somewhere between 67, 66. Crude really just gets smashed. Come down into the 50s. That's what I'm anticipating. That ain't no rally, bro. This is not a rally. Crude are you serious? Maybe WTI, but crude is not rallying. This thing is getting crushed. No, that is not a rally. Back to Tesla at 259 now. And remember, we entered this yesterday. We got in yesterday at this wedge pattern down here. What was this? 246. Started getting in at 240, 245, 247. 247 was that hold. I was hoping it would come back. It didn't come all the way back in. Added up here a little bit. So Tesla is on a roll. We are breaking this downtrend. Boom, there we go. Oh, IWM. IWM just got above that level. Yeah, IWM got above that level, had a lot of support at 82.55. 82.50, a lot of support down there. Now we're headed into yesterday's highs. 184, maybe some resistance at 184. But it could just punch right through it because the Qs are on fire. The S&P is holding 435. It is now above yesterday's close and holding. Okay, how's AMD? I don't know. See, I'm just a little cautious about AMD because of that news. I don't know how much further it could sell off. It got all the way down to 105. But it is trying to press this downtrend. But that was a nice 20% pullback on AMD. Nice little pullback on AMD. A lot of sell patterns. So now that it's starting to lift above 109, maybe 109 is that's where it started to push back in. What was this? Back in May? Yeah, the middle of May. That's where it first started to break out, was above 109. So 109 should be interesting. IWM now above that 183.50 level. The Dow is still struggling. So a lot of Dow stocks are struggling, are starting to struggle. Advanced decline is almost at 0, meaning it is climbing from a negative 750 or negative 800 actually. AMD, but for sure, I've been keeping my eye on the AMD call, on those AMD calls. Open Door is just crushing it. Open Door is crushing it. It's been moving up. I got shooken out, but I got shooken out because I don't have obviously unlimited capital. I was like, I see the Tesla pullback. I feel a little more comfortable holding Tesla. Who knows what could happen with the housing market and Open Door. So it's a nice trade, but got shooken out. I still rather hold Tesla though. I still would rather hold Tesla. See, Zoom is starting to lift a little bit. I got calls on that. You know, the interesting one that I've been looking at is basically MicroStrategy. Oh, it is finding some room now. Okay, so it broke that wedge. Now it broke the wedge and pulled back, found support. Now it's starting to move up. MicroStrategy is there's a lot of short. It has 30% short interest. 30% short interest on MicroStrategy as a play for Bitcoin. And there's almost no doubt Bitcoin is going much higher from here over the next 12 to 18 months, unless there's a black swan, but I'm pretty confident. It is now forming Bitcoin is now forming another little wedge at support. It's been, the longer it holds this, the stronger, right? The longer it holds, the stronger. So what is your proxy play? I know people like mRNA, and that's fine. If you're looking at call options, oh, not mRNA, sorry, Mara. My bad, Mara. The only issue here is that these guys don't really hold. I don't think they hold a lot of Bitcoin. So it is a good proxy play, but I don't think they hold a lot of Bitcoin, and their earnings report could hurt them. Where MicroStrategy, it doesn't really matter because they hold so much Bitcoin, right? They hold so much Bitcoin that even if their earnings kind of sucked, they're still going to go higher because their asset is just holding. Riot still hasn't broken out of this wedge. So I know people will be watching this, trying to get long Riot. It's a cheap play. I'm not into those proxy plays, but a lot of people are. What else did we have in the pipeline? Meta still climbing, still climbing higher. That thing could still burst. Did Amazon make its move yet? Amazon's finally making that move higher. These things are just grinding higher, but I still like the pullbacks. Who's NFLX? Is Netflix? Oh yeah, Netflix had that nice pullback and it's starting to break above that pullback. So that's a nice play. I still think AMD is the best setup for me. I'm just waiting for it to bottom, to completely bottom out. Waiting for AMD to completely bottom out. But I bet this Netflix looks really good intraday. Yep. Yep, especially with the Qs climbing the way they are. And the S&P finding a little bit of resistance. Apple still making all-time highs. Microsoft making all-time highs. Well, no, not exactly. I don't think Microsoft is. I'm not sure. AMD with the break of that wedge. So AMD's filling that gap from yesterday. Let's see how it reacts to that gap, that 110. Also, we got to look into that narrative. I got to go into see what that whole thing was. Got to run for a bit. See you guys at 9 Eastern. Yeah. All right. I'll see you at 9 p.m. Eastern for sure. 100%. Soggy. We're doing that real estate stuff. Fed Chair Powell still talking. What is this guy talking about? He wouldn't take moving consecutive meetings off the table. Whatever that means. Yeah, that is just a monster move from Tesla right there. So what was the news on the semiconductors? There was some semiconductor news that was a little sketchy. See, where's that news at? The semiconductor news. Is it this one? No, it's not it. That's not it. The new US ban on AI chips, chip exports to China. So that's a lot of demand right there. Man, is this another wedge? You got to add on this wedge? This thing is elevated. Sheesh. You always think, can I add more? Where can I add more? Where can I add more size? Where can you add more size? Possibly here. So anyways, looking at this chip sector, shares of NVIDIA and advanced micro devices slumped in the extended sessions Tuesday, blah, blah, blah. I don't care. Just give me the news. AMD launches new data center AI chips software to go up against NVIDIA and Intel. I know some people are into Intel. So that might be good. Both NVIDIA and AMD have launched new AI chips this year. AMD still hasn't made its move, which is why I think it's a solid play for call options, because it just hasn't made its move yet. It kind of ran up early a couple weeks ago, but it's still sitting there. Let's see. So where's the actual ban at? I guess that's it. It's just Biden administration is considering a new ban on the sales of the AI chips to China. Now, let's say he removes that ban, right? or he says we're not considering it. We've resolved things. Nvidia is still going to boom, but that's where AMD really starts to get going because it's coming out with its new chips. We might just go to 265 today if the Qs keep rising like this. We might go all the way to 265. The Qs look like they're headed for 370. So yeah, AMD launching those new AI chips is pretty interesting. I know this happened earlier, but the real question is, when does this start to play itself in? I'm going to throw on Powell speaking real quick. I'm going to let him speak.
Regulatory changes and higher capital, those are all in place in the United States as well. So when it comes to the events we had earlier this year with 3 banks that had pretty idiosyncratic business models and funding models as well, I think we need to learn lessons, and we're not hiding from that at all. We understand there going to need to be regulatory strengthening of both regulatory and supervisory practices as it relates to institutions of that general size, I would say.
You got a lot of questions on that from Congress last week.
That's mostly what they wanted to talk about.
They want to make sure that you aren't, in part, not going to increase capital levels and sort of choke off the small and regional banks in this country and make it hard for them to compete.
So the U.S. has something like 4,500 banks. It's the most banks by a pretty big margin, I think, of any major economy. And we think it's a real benefit to have banks of different sizes and business models that serve local communities and offer different products, as well as having the large banks. And the large banks in the United States are very strong, well capitalized, a lot of liquidity. And they've been a source of strength, I think, through the last couple of events. So I think it's important that whatever changes we do make, keep in mind the need to preserve the business models of these of smaller banks and not just of the largest banks.
Any concerns for you, Governor Ueda, on the strength of the global financial system at this point as we go through this, once in several decades tightening period?
I can only talk about Japanese banks. I think they are well capitalized. They're capitalized. They have enough liquidity. It's true that some smaller banks, regional banks, are sitting on non-negligible amount of valuation losses in their security holdings. But on average, that's about 1% of their core loan capital. So it would be okay. But if we do get to normalize our monetary policy, because we go into the 2% inflation rate equilibrium in the sense I discussed earlier, then rates may go up by large margins. And we'll have to be careful. We'll have to carry out all sorts of stress tests, I think.
I also wanted to ask you, if you go into a more normalization stance away from negative rates and the yield curve control, how you'll manage the risk of the government's enormous financing needs, and whether that's a concern that you think about.
Well, we keep saying that's the business of the government and the Diet to create sustainable government finance.
Fiscal policy in general, I'm curious if you guys will bite on that.
All right, so let's look at the Qs, how much more room they have to go since they are still leading the market. All right, so where's this resistance at for the Qs? I got that resistance marked up there. We broke out of this channel to the downside. Let me take this off. I don't need this right now. So we did break this channel to the downside, right, for the Qs, which basically means the downtrend, we're bottoming. We're starting to bottom from that gigantic upside move. And once you start bottoming there, I mean, I don't think there's we're going to all-time highs in my view. I think we're going to all-time highs for the Qs unless something crazy happens. Oh, we just filled the gap. No wonder. No wonder the Qs just filled another gap. But they did we fill a gap yesterday? We filled the gap and kept going, but that was early. So we filled another gap here. We got another gap to fill here. We got another one to fill here. Well, that one got filled early. So we are filling that 366 gap. But if nothing else happens, I think the Qs just keep chugging along, making all-time highs, picking up more tech stocks, and we have a lot more room to go from here. So we bottomed out on that previous resistance. We bottomed out the previous resistance yesterday. Well, 2 days ago and yesterday. This week was the bottoming. We're going to get PCE data. I think it just looks better. The inflation data continues to get better. And that's what we're looking at. That's what we're looking at anyway. So maybe if we do pull back today, yesterday's highs were 364.55. Just going to throw that in there. Oh, look, we had a nice little plunge off that. Those are only levels. After this, I think we run into what, 367? It is early in the day. We moved up pretty fast after or during that meeting. We've moved up pretty quick during that meeting. But the clear, I think there's a clear resistance around, is it 367? What are we looking at here? Yeah, we can call it 367. We can call it 367. It's got above just about everything else. Just stick with the whole number. So maybe we can hold at 367 or at least consolidate around here for the Qs. Probably going to get a pullback. That's what it's looking like. S&P looks a little different. S&P still hasn't broken yesterday's highs, which is why I said the Qs are leading, and they continue to lead. So maybe the S&P consolidates a little more here. See S&P futures, same thing. They got some resistance here. 442, we're not there yet. But still breaking the trend. SPX, any different resistance? No. Yeah, man, if SPX still has some room to go, but if SPX gets above, maybe it gets rejected here. This is, I don't really like SPX. I don't like looking at this. Where's that gap? That gap never got filled for SPX, 433.88. We'll check that out. All right, now we're getting a pullback on Tesla. That might have been the high for the day, and we just consolidate sideways for a while, pulling into this. You never know. You just never know, which is why we will keep track of this data. Tomorrow is GDP. I think we have, what, like 30 minutes before this camera burns out?
You think have pretty much come down? Where do you think the U.S. consumer is headed?
The consumer had savings from two sources. One was just the fact that people couldn't travel and couldn't kind of spend money on services. That was a lot of it. And there were also the fiscal transfers that happened. And those, there are many different estimates. I would say for people at the lower end of the income spectrum who tend to have a high marginal propensity to consume, most but not all of that money is gone. So there's certainly some residual support spending in laws that passed at the beginning and during the pandemic. But that's, again, I wouldn't say that's today the main driver. If you look at the strength of the labor market, still creating more jobs than there are new entrants to the labor market here, and wages are still pretty high. So you're driving up disposable income, and that is driving consumption, and that's driving the economy.
Wanted to also ask you guys about the balance sheet, very hot topic. Governor Ueda.
Ooh, that's a good one.
How do you think about the expansion of the balance sheet, and how much is too much?
Well, it's a tough question to answer. At the moment, we are using government security purchases to hit the range for the long-term interest rate we have set, which is 0 plus minus 50 basis points. So the size of the balance sheet is an endogenous variable.
The rest of you are kind of in shrink mode in the balance sheet or roll off mode. You've been more aggressive, Governor Bailey. Has it gone smoother than you expected?
Well, so far, I don't tempt fate. It's gone very smoothly, actually. By the way, the reason that you say more aggressive, just to be clear, is that we've got a longer duration of bonds in our portfolio, government bonds in our portfolio. So leaving it to an organic runoff would mean a lot longer runoff for us, I think.
That's why you're outright selling.
So that's why we're selling them. So the target we set for the year, the 80 billion target, was the sum of the natural runoff plus the difference between the target and it's that element that we're doing as active sales. So that's gone, I would say, very smoothly, actually, so far. I'm very happy with the way it's gone. I think the second question that we're certainly looking at actively, of course, is just how far will we go? And I look at it particularly in terms of the stock of reserves now in the system before we hit what I would call the equilibrium level of reserves. Now, we may go on selling the QE stock below that.
So really quick, the reason I say this is the last pullback too is when we take a look at S&P 500 net negative positioning. Remember earlier in the year, we talked about how this was at a 15-year high. It actually drew even lower. It went lower than a 15-year high. And now it's starting to relief, right? That short squeeze is starting to happen. And we're at -5. We got down to -10 shorts. And now those shorts, but we still have a long way to go for the upside. There's still a lot of people. I'd like to say there's still a lot of institutions who are, running with this higher inflation / economic collapse, and they're short S&P. So if we do bounce, they're going to get FOMO and come right back into the market as they have. We've seen flows come into the market pretty fast. And I think that's what we're going to see is this short position, or just keep in mind, this can keep going higher. This will keep going higher if things come out better than expected, as they have been. And that's one of those reasons. Also, as inflation peaks, this is the average net return of the S&P 500 when inflation peaks. The blue line is the average for the last, 50, 60, 70 years. This is what the S&P usually does after you get a bottoming in inflation. After CPI peaks, the S&P doesn't peak yet. It takes a couple months to price it in, and then it starts moving higher. So we're right on track. And I showed this about 2 months ago. We're right on track for the historical correlation of the S&P performance after CPI peaks. We're right on track with that, and we just keep climbing higher. I think we're going to all-time highs this year, for sure, by the end of this year, given that there's no black swan events. Just given that there's no black swan events, and a lot of that is just due to this money printing, right? More cowbell, more printing to monetize the debt. We got fiscal liquidity coming from Biden. That's been there. And then now we got more liquidity. Now we say this CHIPS Act, right? We don't have to go all through that, but that was kind of my point is that there's still a short squeeze to come. The short squeeze is still happening. The short squeeze is still happening as we speak.
We have a entirely passive program as treasuries and mortgage-backed securities mature. They roll off subject to a cap, and it's been moving along at a pace. The underlying pace, if you hit the cap, is about $1 trillion a year, and reserves appear to be quite ample. So it has a ways to go.
Is there anything that would make you speed that up or slow that down?
Good question.
We always say that we're prepared to adjust in light of evolving conditions, but I don't see anything that would cause us to want to do that right now.
Okay, so in the moments that we have left, we've talked about a lot of the risks. We talked a lot about some of the concerns out there.
Of course, watching and listening to our own Sarah Eisen with Fed Chair Powell, ECB's Lagarde, of course, governors of the DOJ and the Bank of England as well, all at that ECB forum in Portugal. Let's conduct it in English. Joining us to react, Goldman Sachs Chief Global Equity Strategist Peter Oppenheimer. I know you've been listening as well, Peter. Just give me your take. Anything you heard there that was of particular interest?
Well, I think that, they were keen to demonstrate the separation between fiscal and monetary policy and how important that was for them. And I think we're very clear in their guidance that they must continue to do what is necessary to control inflation, which is, of course, consistent with what they've been saying recently, and I think being slightly more on the hawkish side than markets have been pricing. So while on the good side of the ledger we have economies which we believe will avoid recessions, in inflation and interest rates are likely to be stickier than markets have been pricing, and I think they're really recommitting their resolve in that direction.
Yeah, they seem committed to slaying the dragon, so to speak, of inflation. What do you believe that will mean in terms of future policy and or the impact, of course, on what you follow closely, namely the economies and markets of these countries in question?
Well, the good news is that inflation is coming down, but it's coming down slower than I think they would like to see, particularly core inflation. And for us, that means that interest rates have got further to go.
Yeah, it's coming down slower, but like I said before, in real time, shelter is actually falling. So the core stickiness is from a little bit of services, but mostly from those services are driven by shelter. So yeah, this is the narrative that people are feeding off of. Let's be a little cautious because, inflation is a little stickier, but in real time, it's not. And that's gonna factor in eventually, which is why there's such an advantage for those who got in early, because the market is looking forward to inflation collapsing. The market is watching or keeping ahead. The market is forward looking. It's looking at inflation pressures much lower. So it's hard to believe all this talk. These guys just can't say the opposite because they have to speak their books, which is buy bonds or buy defensive stocks. And those just aren't winning. You're seeing IWM, you're seeing small caps, more risk assets start to rise versus everything else because it's seen lower inflation going forward and lower, that means lower rates.
I think it probably will broaden out a little bit, but that's more in the context really of still relatively what we call fat and flat market range. What we mean by that is really that point to point, we're not really getting a lot of appreciation in index levels or the average company, but we are seeing quite a large trading range, which is reflecting, this sort of trade-off in fears or hopes around peaks in inflation and interest rates and troughs in growth. I do think it will broaden out, though, mostly if we look at historical periods of very narrow leadership. Generally, equities have held up in the 12 months or so that followed those very narrow periods of leadership. And generally, more often than not, it is because you've seen some broadening out of returns. And that's what I think we'll probably see moving forwards. But again, I would emphasize that if you look at the median company, in most markets, there's been very little change in value this year. And we would expect to see relatively modest returns over the next few months. Bearing in mind that profit growth is pretty pedestrian in most markets, a little bit better in Japan, I would say, than the US or Europe. We still have high interest rates, and that's a higher bar for equities and other risk assets to beat. And valuations are not that cheap, particularly in those leading companies which have generated most of the rally.
All right, Peter, we're going to stop there and get back to our ECB forum as well, but certainly appreciate your insights. Thank you.
Pleasure. Thank you.
Let's get back to Sarah in Portugal.
I wouldn't use optimism, but I would say this in answer to your first question, which is when inflation first arrives, it's really due to very strong demand for goods and goods pipelines that just aren't working, shortages. So that's where it comes from. It wasn't about the labor market at all, right? Or very much. As we get to this stage and looking forward, we think it will be significantly about getting the labor market supply and demand back in alignment. I would say it's a positive thing. I'll say it that way. It's a constructive thing that we've been able to raise rates 500 basis points with the expectation of going further. And we still have a very strong labor market, but nonetheless one that is in fact cooling in just the way we would have hoped, which is to say through things like lower job openings. Job openings are coming down. The quits level has returned to its pre-pandemic level. Wages have, if you look at employment compensation index or average hourly earnings, they've moved down about 1% towards more, still very high, but towards more, so a more sustainable level that's consistent with 2% inflation. So
what he's saying here is Powell is basically letting them know that, hey, our supply side inflation is actually resolving itself. Wages and job openings, all those pressures to push up supply side inflation, which is what they cannot solve. They can't create more people. AI actually solves that, right? AI is solving that as we speak. I'd be, really surprised, or, it'd be crazy to see him actually admit that AI is solving that problem. We'll see if he actually does it. But supply side inflation coming down is what he's saying. And that's the part they can't solve. So that's the part that they keeps them tight. If that is not the case, they don't say tight, or I'm sorry, if supply side continues to fall, which is prices paid from manufacturers, from services, wages are still falling. There's job openings are starting to fall, and those jobs are getting filled at the same time. Then if that is the case, then they're done hiking. They're done hiking. There's more progress, and that's a dovish outlook. I want to see how the market responds to this. Oh, it's a kind of we're delayed, but
The change in inflation expectations, changes in price wage setting behavior of businesses. So previously, businesses hesitated to increase prices because if they did, others will not follow suit. Now say they are raising wages because if they didn't, they will have trouble recruiting workers because others are raising wages. We think this is a good sign for us.
So the topic of Sintra of this ECBU forum is inflation, volatility. So now is prediction time. In 1 year, when hopefully I'll be invited back.
all right, let's speed this up. I think it just ended actually. I think they just ended. So now the market can price in. The market can start pricing in this meeting. Barbell US growth with Japan. Japan is growing. Japan's market is, the market is selling off hard. Japan is expanding though at the moment. So Japan's expanding. It's all about inflation, blah, blah, blah. It's coming down. The market is pulling back a little bit. Q's back at previous support. S&P just got rejected 3 times at PDC. Those are three rejections at PDC for the S&P. See, I'm still watching Tesla to see if it can hold this previous breakout. Q selling off pretty hard.
Convenience retailer is with us. Casey's General Stores has seen its stock run up by nearly 20% in the past year. If a recession is on the horizon, could it be a beneficiary? We'll discuss.
Plus, our Sarah Eisen wrapping up conversations with the central bankers in Portugal, including the Fed chair moments ago. Highlights are coming up. Stay with us.
The highlights, okay. See what they have to say. S&P just pulling in a VWAP, really. See, what are rates doing following that meeting? Rates are just not moving. Rates are not moving after that meeting. Qs are looking for VWAP at the moment. You also got IWM holding above VWAP. You have the Dow still. The Dow is pretty weak today. The Dow's been weak all day. All right, let's see if S&P can actually hold VWAP this time.
Covered.
All right, let's see what these guys say. They're back.
Watch Regeneron today. The FDA did reject this higher dose version of its eye drug that is used to treat a disease that can lead to blindness. It's worth noting many analysts still expect the drug to be eventually approved, but the timeline is up for debate. Down 3.5 today. Was up about 14% for the year back in April, let's say, but those year-to-date gains, Leslie, are gone as of now.
Yeah, completely went away. Turning to the consumer, our next guest runs the nation's third largest convenience store chain with a finger on the pulse of everything from fuel to fast food to charging stations. Just yesterday announcing a new strategic plan for the next 3 years at the company's Investor Day here in New York City. Joining us here at Post 9, Casey's General Stores CEO, Darren Rebelez. Thank you so much for being here, Darren.
Thanks for having me,
Appreciate it. So your 3-year strategic plan, your growing store count, 350 stores by the end of fiscal year 2026, accelerate food offerings and prepared label offerings. How do you plan to get there? Is this organic growth? Is this M&A? Big CapEx? What do you think?
Yeah. Well, we're going to do it through a combination of things. About our growth algorithm is about half of organic growth with the existing store base. So driving same store sales through merchandising mix, our prepared foods that you talked about. We're the 5th largest pizza chain in the U.S. And so that's the crown jewels of the KC brand. And so we're really accelerating on that front. But then the other half is through new unit development. That comes both organically and through M&A. And something interesting about our industry is about 2/3 of the convenience stores in the U.S. are operated by chains of 10 stores or less. So it's very fragmented, very small operators. And in the current environment, it's a very challenging environment.
From your most recent earnings call earlier this month, you say that inflation pressures have subsided some, of course, depending on the category. How much of those pressures had you been passing on to your customers? And now that they are subsiding, does that change the pricing at all for the items in your store?
There's been a mix of that. On the consumer packaged goods side, a lot of those cost increases as the manufacturers experience got passed on to us, and we've passed those on. We've been able to keep up with that. I don't see those prices subsiding. On the prepared food side, it's more commodity driven. You think of proteins, cheese in particular for us. We use about 30 million pounds of cheese a year, so it's a big input cost. And we try to price through the cycle, so we don't necessarily raise prices all the way to cover that cost, because that commodity is a little more volatile. So we know those costs.
All right, that's cool. Whatever. So this morning we got the speeches done. Retail sales from Japan coming in a little later. Oh, that's us live. Let me see if we got anything new coming in the pipeline. Well, I'll put it back on markets. We'll get back to the market. All right, cool. Big pullback on Tesla. The Qs and the SPY really are just looking for support now following the meeting. The SPY has been getting rejected by PDC all day. So if it can hold this time, this will be good. It's at 436 right now. 436 is the previous day close. If S&P can hold this, it will be solid. Same thing with the Qs. Qs have actually been a lot more stronger. Left-hand corner up here. Qs are holding that 364.60 area. Nice little bounce there. And if we look a little deeper, why do I have these marked up? Let's take a step back. What are the Qs looking like? Oh, okay, that was yesterday's highs. So the Qs are holding yesterday's high of day. That's good. That's strong. S&P, on the other hand, is struggling to get above yesterday's close, not even close to yesterday's high. So definitely technology still stronger. But we'll see. SPY's been making these moves lately. I've seen this so many times where S&P does this. It forms this descending channel or this bull flag, kind of sloppy. It drops out one more time and then it just heads higher and breaks out. If we break out here, this will be nice. This will carry Tesla higher for sure. The Qs will be moving higher. IWM still holding VWAP. It's kind of weak. It's whatever. It's sideways, but the Qs definitely still remain the strongest index. Qs definitely remain the strongest index here. And I'm still keeping my eye on Tesla. Stop below VWAP. Stop below VWAP. That's my stop. Ooh, Open Door finally had a nice flush to the downside, right in the, what is this, VWAP? Yeah, nice flush on Open Door after that vertical move. Looks like you got some FOMO coming into that. Overall, like I said, though, the Qs are holding yesterday's highs. So we'll have to continue that up here in the right-hand corner or left-hand corner. That is definitely happening. Got to hold this zone. Tesla's got to hold this zone. And then get out of it. We got to hold the zone and then get out of the zone. So it's just the 3 minute. Let's go to the 5. What's the 5 looking like? So we're in what, an hour and a half? So yeah, we got to be on this 5 minute. MasterCard CEO coming up next. Not interested. Deutsche Bank downgrades. Walgreens. Oh, so Pinterest is teaming up with Amazon. Nice. Okay, so this is a little better article here. I'm just looking at the chips. I'm trying to understand the narrative with the ban on China. Is it real? Is it going to continue? So the government is just weighing the restriction of exporting the most powerful chips out to China. That'll basically crush Nvidia and AMD's growth, right? Intel also, any US companies. So that's the question. Do we really want that? Should you ban it? I don't know. Should you ban chips to China, or should you just out innovate China, right? I don't know. It's tough because the AI is the dangerous thing. So do you hurt? Because if you sell to China, your economy automatically improves, but you increase the threat of weapons. But the US has never cared about that in the past. We've given weapons to enemies before for money. The restrictions would impact Nvidia and AMD, obviously, blah, blah, blah. That's interesting, though. Biden has forced Nvidia to create weaker versions of their special flagship A100 chips. So they're already creating weaker versions as it is. But I guess even under these restrictions, that the chips would have to be even weaker. Or no, they would even ban the weaker chips. Dang. So banning even weaker chips, wow, that's pretty intense. They'd probably ban it until China falls behind enough to where it doesn't matter anymore. All right, so we got Qs pulling back again. Biden takes another step, really. Is this just an old? I think we've already seen this, right? All right, we're getting under VWAP. I'm about to get flat Tesla. Let's see any bounce here. Do we get a bounce? Can we get a bounce above 254, 255? Can we hold 255? Because S&P just pulled right into VWAP, bounced a little bit. Q's bounced slightly. If we make a new low, it's over. But you always wait for that initial bounce. VWAP's a big level. All right, so SPY is pulling up a little bit. So the Qs. All right, I'm just going to set a hard stop. Wait, what? We might bounce here above VWAP. We'll see what happens. More rate hikes. So that was, I guess that was more rate hikes needed was the conclusion of the meeting. More rate hikes needed. I just think they're bluffing. I think they're bluffing. I don't think there's more rate hikes needed. Wow, AMD is getting above PDC, starting to hold. This might be a good entry. And then also, let's look at that CME data. Does that CME data align with this narrative? I'm going to check out CME, basically what the market is pricing in. By the way, there's a record inflow of stocks coming into the market, a record inflow into the market. People are getting very bullish, which is why I think this is the last small little pullback here. There it is, CME Fed Watch tool. So let's take a look at this. Let's take a look at the CME Fed Watch tool. While Tesla holds a VWAP. Tesla ended up holding. That's why you never get shooken out. I mean, it could roll over, but you don't want to get shooken out. I'm watching the Qs. I'm watching the S&P to see if they bounce. They bounced before Tesla actually bounced. But if I were to add to this position, which this big pullback could be an add. You still want it to see it break the trend. Still want to see a break of trend. Not out of the woods yet. Oops. Definitely not out of the woods yet. So let me set an alert. Once we get above 257, then that should be a nice entry point. We're now getting above this resistance level that we turned into. Well, it was a resistance. We turned into support, dropped out and turned into resistance. So that's a clean level. 257 is pretty clean. Looks like S&P is already break. Man, the S&P is moving. These markets are pretty strong. Now it's testing PDC. The more it tests the previous day close, the stronger it gets. This is the 1, 2, 3, 4, 5. This is the 5th time the S&P has tested right here in the left the previous day close. It's going to break one of these times. So anyways, that CME data, I guess I'll keep it on here because we might see that break. But that CME data was basically, here's what I'm looking for. That CME data is actually, you know what? Let me get some. I think my camera's about to probably run out of juice. So just FYI. Get a little bit more coffee here. All right, so CME data, this is basically what is the market pricing in. You can't see it on here. Watch, this is what it looks like. I'll show you guys really quick. See if I can get fast at this. Faster at this. There we go. So this is the CME data. And basically what it is what the market is starting to price in. You can see there's an 81% chance that they actually hike rates in July. So the market is pricing in a rate hike, which is super bullish because we're moving higher as we price in another rate hike. If that were to change, it'll be interesting to see how the market changes. I don't even think the market cares at this point, to be honest. I really don't think the market cares about rate hikes as much as we thought versus the economy. There goes my my signal. That was really quick. We got above VWAP really quick. All right. Let's get back into this. So we're above 257. I'm gonna come in on the 1 minute because this is how I like to enter. Now, this will be some education. Maybe I get stopped out. Either way, we're breaking the downtrend finally. I want to see a pullback. I want to see a clear hold of 257. That's the level. So we need to hold 257 and maybe even some capitulation with it. And you're starting to see the 9 EMA get above, right? Let me zoom in even further. We're starting to see that 9 EMA get above the, well, it's not above yet, but above the 21 EMA. So that's a bull flag cross right there. Keeping your eye, also keep my eye on S&P up here. Can we get above and hold finally? Qs, can we get above and hold? Not sure. We're getting a small wick. We're starting to move. This looks pretty good. Maybe scale in just a little bit. All right, it's holding. Look at that. Look at that nice wick. That's a nice hold right there. That's a nice hold. And we got the bull cross, and we're breaking above the previous candle. And you have the Q starting to push higher also. Scaling in a little bit. Pretty much fully, oh shoot, pretty much fully sized in at this point. See if we can hold. S&P is pushing. Advanced decline still moving up. Okay, nice. We're getting a push. All right, we're above that resistance. I mean, next resistance is 258, obviously, but we are holding. This could push all the way back to the highs, right? 260. Got that bull cross. We haven't seen this for a while. Haven't seen this at all. We got the bear cross here. So we get the bull cross or the golden cross, whatever you want to call it. Oops. That thing is skipping. I got to figure that out. So, all right, let's see. Tesla can push back to the highs or at least get in right here. All right, so we're getting that looks like we're getting the pullback and the retest. Q's pulling back. Now this is very clear support now for me, so I don't have to worry. My stop is going to be a hold. Should I call it a 1 minute hold? My stop's really going to be a hold below the EMA. Now that momentum is starting to pick up, if we get below the EMA and hold, also 257, right? If we hold below 257 for sure, I could scale back a little bit and say, hey, it needs to close below. Oh, see, we still don't even have the bull cross here. So we're still waiting for that bull cross here, or that golden cross, whatever you want to call it. So what is S&P doing? S&P looks pretty bullish. It's showing a bull flag. Now we got a bull flag over here forming. Still needs to get past 436.50. There we go. We got a new high in the local high. Qs are still struggling. The Qs are definitely weaker at this point, and IWM is starting to pick up. So we're probably seeing somewhat of small caps. Maybe some small caps are picking up. Not sure who it is. AMD is breaking out now. Wow. AMD is breaking out. So all those AMD call boys, you better look 6 months out. You better buy some protection, some time protection, because you just don't know, man. What if I still am cautious with AMD because of the chips thing. Now I'm a little more cautious. But if there was a time to get a starter position and AMD calls, it would be the hold of 110, 109. Some people might say, no, we need to get above 112 and hold. Maybe. But the downtrend at least is being violated. It broke and held the downtrend. That's pretty clear. That's pretty clean price action. All right, S&P is starting to rip now. We're fully sized in. All right, so just to show you guys S&P getting above that level. Whew, been watching this level for a while. This was yesterday. Now we're into yesterday's highs, 436.81. The high of day yesterday was 436.81. Let's mark that up. There we go. That was yesterday's highs, but we are above resistance. We broke out. I think we had that bull flag and broke out of the bull flag. So if we can keep moving up, we have no more resistance really. A lot of room to run. Let's see, 30-minute. Where's the next resistance? If we get above this, our next resistance really, you could say 437, but man, I don't know. I'm gonna have to say 438. What up? What up, Isan? Apple new all-time. Yep, Apple new all-time high. So we're pushing up. Let me take these gaps away. This kind of ruins it, to be honest with you. Let me take off these gaps. The real next resistance, obviously. Okay, so we do have a gap to fill at 437. I didn't really see that for S&P. Got a gap to fill at 437.19. We got some resistance at 438. And then if we clear that, 439.50, pretty much. So those are S&P levels. QQQ, let's see, what are the Qs looking like? Qs, yeah, we already have the Qs. The Qs are pretty clear. These are resistance for the Qs. And we've bottomed. I think we've bottomed out. Asan, I think we bottomed out on the market. I mean, that was a bottoming right there. We got above that level, so we are starting to bottom now. Let me see what AMD looks like on this chart. So AMD is breaking that down, that downwards pattern. You could call it a bear flag, but I mean, it did fill the gap. So yeah, see, it's breaking that. Yo, remove this. What the hell? All right, yeah, we bottomed at 107.50 for AMD. So AMD starting to peak above yesterday's high at 111. That's pretty solid. Does have a gap at 118. That's a big gap to fill. If we get above there, that is a big gap to fill. But you see that downtrend is starting to get violated for AMD. This would be the time to get a call unless you really think the earnings are going to get hit. Unless earnings really get hit. Come on, man. By that China news. Possibly. Who knows? And then for Tesla, we have a gap to fill at 264. I think we're above most of the resistance, but 264.50. Got some resistance there too. All right, back to the traders, see where we're at. No, 1 minute or 3 minute, my bad. That was a nasty pullback, but that's what you want to see for Tesla. Right, we'll just want to see it climb a little higher. It's running into that first resistance level. Give it some time. The S&P is making new high of days, so give it some time. I mean, I'm going to give it some time. I got to speak for myself. Qs are a little weaker for sure. The Dow is now lifting. Here comes market breadth. Dow is starting to lift above VWAP. Market breadth is rising. We're above 50. We're above the zero bound now. Market breadth is lifting, led by IWM, by small caps, and Dow. This is good. This is I think the momentum is starting to roll back up. That's what I'm seeing. Momentum is starting to pick up. We got momentum picking up. So back to that CME data. Well, I'll keep this on, but I want to see where the market sees cuts at. Sees a hold. All right, hold. Who cares? Who cares? I don't care. So anyways, July, the market is pricing in a rate rise in July. The market is pricing in a rate rise in July. I need to take a look at this because if not, if this is true, I don't know. This setup for AMD is solid. I like it. I like to see the setup for AMD. I just don't know if, again, that news, I need to really think about the news. Is it real threat? Is it bull crap? What is it?
So we have seen bank credit conditions tighten. The question is, and that's what we're trying to achieve. The question is there another channel of that or a greater amount of that coming from what happened in March? We don't really see any evidence of that, but I think that's certainly in the back of my mind to see whether we do see that.
So clearly they're watching that carefully, but they're encouraged on that front as far as any sort of extreme credit crunch or credit tightening. Now, perhaps the most telling remarks came when I asked him about when he thinks we're going to return to the target of 2% inflation. Remember, this is in the forecast in the dust, but we haven't yet heard Chair Powell himself of when he forecasts that to happen. We did today. Listen.
I don't see us getting back to 2% or next year.
You don't?
No.
Oh, open door. Yeah, open door. Monstrous rally, right? Above that level. Monstrous rally on open door. This is basically that level above 340 was the breakout. So if you do get in, it's like if it holds under 340, which is a big pullback, that's a 10% pullback. I wouldn't do that though. I wouldn't even think about that. That's just me. But for the most part, yeah, it's breaking out. Open door is breaking out. It already hit 404, which was that previous level. You draw that out. 404, yep, that previous low. I think we had talked about this around $3 if it held. Now, I'm not the best example because I got shooken out on one of these days. I got shooken out because I saw Tesla fall and I wanted to be long Tesla. That was kind of my plan. If Tesla kept going, fine, I would be long open door. But once it fell, I wanted to be a little more long Tesla. So that was my thing. Even though I didn't really need to do that. Like I did get shooken out. No excuses there. $5 is the next level. If we get above 4, very clear. Look at that. That's pretty clear there. Should I make these thicker? So yeah, open door. Open door is definitely has bottomed. Look at that nice little like wedge breakout there. Also, the price action of open door, I don't like it either. Like to be completely I don't want to say convinced, but this setup scares me. This ascending setup scares me. I don't want to be too heavy in this because these are usually bearish. But so far it broke out. So there's a lot of strength there. People are probably going to get squeezed. So good luck on that trade. I'm just trying to show you the levels. Here are the levels. Got resisted at 4. It'd be nice if it came back into 340 and held. That'd be very beautiful. If it came back in 340, I might actually think about it. So if it comes back to hold PDC, right, that would be nice. Tesla potentially forming a larger daily wedge. It might do this, come all the way back down. Because now we have S&P breaking a little lower. Let's see. See if I can extend this line. No, I can't. Yeah, I should be able to. There we go. Cool. So we broke out of that. Now it looks like a bigger wedge forming. Still playing catch up. Looks like the market overall is pulling back. $257. Got to hold 257. SPY pretty choppy. Q's pretty choppy. Your average is 320. Okay, nice. Football Legends. 320. Right, just hit if it goes lower and rolls over, just hit your stop. And actually you're above the breakout level, so you're in good. You're in good. You're above that breakout level. See if Tesla can hold this 357 level. Q's IWM just pulled back. It's still trending up. IWM trending up. Dow trending higher. Advanced decline trending. I'm surprised this camera is still going. That's weird. I guess it just needs to be completely fully charged. Hello, camera. We're still straight here. If you had all the money in the world, what would you do? Chavez game 1. Hey, Chavez, are you from the TikTok, bro? Are you new? I just because your name is on YouTube, so I'm not sure if you're. Where are you from, Chavez? If I had all the money in the world, what would you do? Is this just like a general question? Or like you mean like what investment would I do? Like how would I move my money around? How would I move my money around? Or in general, what would I do? I guess I'll just answer it in two ways. So because this is a financial podcast live stream, I'll just answer it as far as money. If I had all the money in the world, I mean, that's kind of a weird, I don't like the question because it's like, well, why invest? But if I did have all the money in the world, what I would do is, for investments anyways, I would buy Bitcoin. I'd buy mostly Bitcoin and Tesla. Let's say with 50% of it, I'd buy Bitcoin and Tesla. Ethereum, Palantir, Chainlink. Those are my conviction plays. I have all the money in the world. I can make more. I can double it, triple it, quadruple it. With the other 50%, I'll just roll it into the other 50%. I'd probably put into, or out, not even 50%, about 40% of it, I would put into something that's going to give me yield. So maybe ETH yield, or I don't know if stable coins are ready yet, but I'd put it in some type of yield. Because if you have a lot of money, you can live off the yield. The other 10%, I would trade it because I like to trade. So I just trade the other 10% of it. Now, if you're talking about lifestyle, what would I do if I had all the money in the world? If I had all the money in the world, I would dedicate myself to being, first off, healthy as I can. I would literally get like a sauna, cold tub. I'd make sure I could be optimize my ability to work, get all the best food. I'd have a chef. I would have a chef. I'd have the best food in the world. And I would still work. I would basically try to educate people on health, fitness, and finance. Health, fitness, and finance. I'll try to educate people as much as I could. I would try to learn more. I'd travel to different countries to hear about the Bible, about Christianity, because I think the West is lost in Christianity. I'm a Christian, but I think the West is very confused about Christianity. And so I'd want to go hear what they have to say, learn a little bit about that. I would go. I wouldn't be chilling. If I had I would optimize my health and I'd work as much as I possibly could. And I like to work. I like to learn stuff and spread the knowledge. All right, there goes the camera. Would you stream? Let me switch the camera. So would I stream if I had all the money in the world? That's a good question. I think I would. I wouldn't stream all the time. I'd stream differently, but if I was like, yeah, I would stream. Like I said, I would get my stuff together. I'd be able to stream. I'd just tell you more of what I think's gonna happen. If I had all the world and the money, I wouldn't stream as much because I would be able to do other things. I'd probably be able to start a business a little more, but I would still stream. It would just look different. Obviously, if you have more resources, you can do more, and you can prioritize how you run your business. But let's see, looks like the market is pulling back a little bit. We might have to come back to VWAP again. This 357 level, I want to see it hold. Got to see 357 hold. Chavez, where you from, bro? Gotta have 357 hold. If not, I'm gonna take off half my position. So what are we looking like? Looking kind of heavy. What are we looking like on the 5-minute? We got some support here, so it's tricky. All right, let's hear what they're saying about Powell.
2025.
Yeah.
Core inflation 2%. So you're going to be restricted for a long time.
No, we will be restrictive as long as we need to be.
Got a little hint there, but I would say overall, it was a pretty hawkish standpoint. In other words, they're still more worried about inflation, Carl and Leslie, than they are about the overall economy. He did say we're starting to see signs of cooling, for instance, in the labor market. They're watching that, but no real talk of recession, and really just wouldn't take the bait on overdoing it on tightening, and also, maintained over and over that there's still work to be done. Wouldn't commit to whether it was July, September, every other meeting, that sort of thing. But that's all under consideration right now. So if you were wondering, Carl, if Powell was, maybe less hawkish or a little more worried about the economy, I didn't get that today.
No, that was definitely the read over here. I thought some of the most interesting stuff you got was out of Japan, and that amazing line about monetary lags getting measured in decades.
That was funny, right? The last time they were tightening policy was a very, 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 very long time ago, and they're finally starting to see inflation. Going into this meeting, the big question mark for Ueda, and remember, he's the newest of all four of them on stage. He really just became the head of the Bank of Japan a few months ago and has only spoken at policy meetings. So the big question is how much pressure he's facing now that their overall inflation rate is double the 2% target. Do they have to stop easing? The yield curve control, the negative interest rates, that's all in full effect. And he indicated that by his measure, their inflation is not yet at 2%. And he doesn't necessarily see that happening until next year. And then maybe they'll be under more pressure to unwind that. But didn't sound like he was ready anytime soon to change policy or even intervene in the currency market, where there's some chatter today because the yen has just gotten so weak. He said, well, it's them. It's Bank of England and European Central Bank and the Federal Reserve, because they're all tightening policy, so their currencies are getting strong against the yen. And said he's monitoring it. That was the first time we got that headline. So they're clearly watching it, but I didn't get any hint that they're about to reverse course and do anything hawkish.
Sarah, I think you really hit the nail on the head on why it was so special to see everybody together, because as you mentioned in the panel, they talk behind the scenes. Now they don't, get their directives from the person sitting to the chair to their left, for example, but they do take into consideration the global impact of their policies. So it was really amazing, and he did a great job following up and asking each individual the appropriate questions for their region. But just to kind of get a sense
So what am I ahead?
May not be restrictive enough, whatever. All right, here we go. The test of 257, see if it holds. If not, I'm going to take off half and just wait. And we're coming into that 5-minute 21 EMA also. So that's a clear resistance level there. I'm going to throw the tape on here. See if we can hold. See if we got any bids. Okay, we're under 257, above it. We're still holding it, holding 257 so far. Strong level. Looking for some unusual selling volume. Unusual sellers here. Bids are stepping up. Bro, what the heck? I don't want to see that. No. All right, I'm looking at the size down here. Well, the bids are holding it at 257.20 cents. This is an important level for me. All right, they're pushing them down. Bigger orders coming in at 257, but SPY is catching a small bid here. 257.13. Whoa. Bid stepping right back up. Back into the 20 cents area. See if we can get to 30 cents. Yep, we're at 30 cents. Bids are definitely holding. I don't see any unusual volume. Man, that was a quick flush right back. Quick flush. Yeah, they couldn't hold. It's pretty bearish. See if we can push up 98. Nope. It's going lower. It's going lower. Right back to 257. Oh man, that's some big size down there. Definitely starting to hold. There we go. All right, we're starting to pick up now. 257.70. That was a nice bounce. Now we're above this. It's a nice wedge. If we break out of this, we're probably going to 262 next. I like this setup. And I'm hoping for a gap up if we do that. Can we get above that level and also gap up? Those bids came in pretty strong. S&P still grinding. Wonder if we can hold 257 again. Pretty bullish. Let's say what, 256, 62. Now we're at 258. Man, if the S&P breaks out of that, makes a new high, it looks like it. I think Tesla's going to keep climbing. S&P is moving. Oh man, that was a big move by the S&P. Big move by the S&P. Big move by the S&P. Just blew past the previous high. The S&P is exploding. Yeah, I'm looking at the 1 minute, but that was a big move by the S&P. We should see Tesla clear this 258, 258.50. Dow made a big move. Dow also made a big move. Advanced decline moving up. Q stepping up. NVIDIA says any China export ban will be a loss of opportunity. Yep. Qs are still pushing up. Man, they're really trying to push Tesla down. The Qs are up. S&P is up. Tesla's starting to struggle a little bit. Wow. What is coming down the pipeline? What are we missing here? There is some volume coming in. S&P is already at new highs. Come on, Tesla. What are you waiting for? Qs are pressing new highs. The S&P is ripping, though. S&P is still ripping. A lot of people probably got stopped out of their shorts. I don't really like this lag. We should have just ripped through that. We should have ripped through. I don't know what's going on here. A lot of shorts stacking up at 258. We should have definitely ripped through that. We didn't see it. Hmm. Okay, Qs, new high of day for the Qs. New high of day for the Qs. Let's go Tesla. We should rip out of here. New high of days for the Qs. SPY, new 2-day high. Advanced decline is ripping higher. The whole market is on fire right now. The whole market is on fire right now. Tesla is struggling. I don't like this. I do not like this. This is I mean, it should carry through, but if we get a pullback, this thing might weaken. All right, there we go. Now we're getting the push. There we go. Now we're getting that push. Let's see if we can break above that previous level. Man, that 3-minute bar was strong. We also, this is a FS Insight, Tom Lee's company. Yeah, the Qs, S&P is moving higher. That's good. We also got some very good news on housing rent inflation this week with the Realtor.com rent report Tuesday. CoreLogic Case-Shiller Price Home Index. Both show that rents, home prices are now declining or set to decline year over year. That is outright deflation, not slowing inflation. These real-time measures often get out of sync with actual CPI data. This is well known. This is a well-known fact, as CPI is designed to smooth volatility, but naturally lags. This also means that real-time trends point to a different picture, and then what the lagging CPI actually says. And this is known to Fed. Yeah, they know this. But the Fed has a tough job because they are fighting inflation and fighting to maintain credibility with the public. If the public doesn't believe forward-looking measures, skepticism today, they will only care. All right, well, we're getting that push. Super bullish. I'm gonna present this on Friday. This is just so bullish. Realtor.com. I'm gonna have to pull this up too. Foreclosure spiking. Prices are coming lower. All right, I'm going to follow Zillow and I'm going to follow realtor.com for now. All right, well, we should be pushing higher now. So to end things out, I think Tesla will continue to rise. I might just keep this up here, getting to all-time highs. We have a nice wedge or do some type, or I'll come back on. I don't know. But we are starting to break out. Two and a half hours. Maybe I'll just keep the stream to 2.5. No, I don't know. We'll see. Market is barely starting to rip higher though at 9 after that Fed meeting. Well, new highs for S&P. New highs for the Qs. IWM is vertical. All right, I'm out. Don't forget tonight we will be doing a real estate podcast, how to buy a house, how you should go about buying a house, and if you want to invest in real estate, how to get started. Check you guys later. Appreciate it.